Good evening, everybody. So I think it's great to be here. I think for me, this feeling is like, Rajkumar Rao sitting with all the icons of the Amitabh Bachchans and Jitendra and Shatrughan Sinhas. So for me, it is equally exciting as well. Yeah. I was actually, yesterday I was watching this show on Netflix. It's called Arnold, right? And it says that whatever is visible is possible. So, for me to be on this panel, my gratitude to all of you, because I've seen them, we've seen them as icons, and to be on this panel, sitting within them, I am lucky to be here. So thank you so much, everybody, to be here. We'll start with primary introductions, and I think let them introduce themselves as the best way to do it. It's this discussion round, it's all about the startup funding, financing, where to go, whom to approach, what are the types of fund, what stages they kind of, invest into your specialities. So please feel free to kind of, explain what you do in a minute or two. That will actually give the context to a lot of founders over here would wanting to kind of reach out to you, and what is the best way to reach out to you guys. Starting with you, sir.
Hi everyone, I am Ankur Pandey. I head SBI's Startup Hub in Bengaluru. So this is the first such initiative SBI has started in 2022 to help the startups and at all the stages of their life, you can say. We are sector agnostic, we look after the startups, we do provide the support for mentoring on the funding, we do invest in startups directly as a private equity, we take the stake as a private equity investments. We take the debt exposure in the startups. We also take them to the next level till their listing and IPOs and FPOs. So we have brought in all our joint ventures, 15 joint ventures of SBI together in the Startup Hub, so that we can take care of your end-to-end requirements of the startups. Just somebody who walks into the Startup Hub with an idea to start an entity until you go on for your IPOs and FPOs, and we can support you entire your life of the startup, entire your journey of the startup till you become a corporate and so on. Thank you.
Thank you. Anup, sir.
Thank you, Ankur. My name is Anup Kuruvilla. I'm a co-founder of OneCrowd. We are Category 1 AIF, but with one distinction. We run a discretionary fund. In other words, our LPs have a right to say yes or no to any particular transaction. We are generally amongst the first institutional investors in any startup's cap table. Typically, our investment size is about 2 to 3 crores. And of course, when we do follow-on rounds or Series A rounds for our existing companies, then we go up perhaps to about $1 million US. We are sector agnostic. We have an AUM of about 200 odd crores. We have invested in about 50 companies, and they're quite diverse. It's very contrarian. We believe we are contrarian investors. We invest in areas where generally most investors would feel shy about. So that's a little bit about our background.
Hi, good afternoon. My name is Venkat Raju. I represent YourNest Venture Capital. It's a 11-year-old fund focused on early stage deep tech funds, and we are now in the third fund right now. And sector agnostic, but deep tech across multiple domains, from space tech to health tech to cybersecurity to robotics and drones and so on and so forth. The mission for YourNest Fund is looking for deep tech startups with products that have potential to scale globally. So built in India for the globe is the mantra. And I've been part of YourNest now for last 2 years. It's an 11-year-old fund, as I said. And so focus is like very much deep tech. Typically the first institutional check, we write a check anywhere from $500,000 to $1.5 million. And we also co-invest with other leading VCs here. Thank you.
Thank you, sir.
Yeah. First of all, thanks DNB for organizing this. It's always great to kind of share back what we are doing. I am Bhushan from Multiply Ventures, one of the partners and founding partners there. We typically invest in consumer and fintech as two sectors and come in very early. From inception to Series A is our sweet spot. Typical check sizes vary from $500,000 to $1 million to begin with, and then we subsequently get over $2.5 million in a particular deal as follows. Then talking about the fund thesis itself is most of our career for about all the three partners have spent more than 20, 25 years in startup ecosystem, raising most of the funds like you guys on the other side of the table. So now last 3-year journey has been on the other side of the table where we thought that the grass will be green on the other side. So we're experiencing almost like a startup here. So here, definitely beyond capital, we help you on operating kind of rule books, and that's our forte. Did about 21 investment from the fund so far, 50% in fintech and 50% in consumers. Thanks.
Thanks. This is Parag Dhol from Athera Venture Partners. Some of you know us as Inventors India, which was our earlier name. We have been investing since 2008, 35 investments made in India. Redbus and Policybazaar are probably our best known investments. Think about us as investors in consumer internet, software as a service, and deep tech companies, roughly 1/3 each in each of those segments. It's a 7-person team based out of Bangalore, and we invest 15 to 40 crores in pre-Series A and Series A rounds.
Hi, this is Sunil. I'm from Sprout Venture Partners. We invest at the seed stage. Typically, check sizes are around $500,000. We're currently investing from a fund 2. Out of the fund 1, we have about 15 portfolio companies. The more popular one amongst them are Pixis and Rippler. So those are the 2 popular ones from our fund 1. In terms of themes, I mean, we actually, rather than calling out sectors, have called out 2 themes. So we invest in what is called a play on the consumer demographic profile of the country. And 2, we are also playing on the technical talent from the country. So that's a large theme, but those are the 2 themes within which we typically invest.
Great. Thank you so much, sir. So I think we have a lot of startup founders over here, and I'm sure that on behalf of them, there are a few common questions that I would like to ask. So I think let's do the left and the right kind of sessions, because everybody may not be able to cover each question. So starting from my left, yeah. So what is the role of capital according to you, right, for a startup or a founder, and how it's going to help? That's one question. And the second would be that how do you or whom do you invest upon, the idea or the founder? I think these are the 2 questions. I think we'll take it from sir. Otherwise, whosoever can take it from here. Yeah.
I think the first question was whether what is the type of capital we are. I guess depends on, I can describe what type of capital we'd provide, and different investors will have different philosophies. But since we are very early stage investors, for us it is very critical to be very involved with these startups, because they need help at this stage. So what we do is obviously the startup the founder runs the company, but he needs help in several areas, and we depute, we have about 50 advisors who are attached to us. One of them works with the company to helping to scale them up as a director there. So I think that's one from a type of, it's very intensive. That's the challenge in early stage investing. It's making actually the investment is the easy part of it. It's actually maintaining the involvement in the company, because you're getting into a 7 to 10 year association. So you better be sure about, and this leads to the second point, who are you backing? You're backing the founder, obviously, because you're getting into a 7-year relationship, if not more. And if you don't have your chemistry, then you are wasting everybody's time. You still make mistakes, but you try to be backing that founder as much as possible. Everybody's got a good idea. Ideas are a dime a dozen. It's the quality of the founders which are difficult.
Sure. Venkat sir, your take on that.
On the last point, I concur. So yes, ideas are important, but a lot more important. Any investor you would see, ultimately you're betting on the founder or the founding team, if you will. Capital at this stage. Now, if you're a services company, you can generate sufficient revenues and continue to scale up. Or you want to run a lifestyle kind of business, that's okay. It does not require much capital. You can build it and the way you run it. But if you're looking for a scale-up company where you're building a product which is going to take a lot of time of investment to turn your idea into a product, from a product into a revenue-generating business and scaling up and going forward, capital is required at each one of these stages. And that's where founders should have clarity in terms of what kind of capital they need and from who. And are those people just financiers, or are they going to be helping you along that journey? And it's very important to understand, because just like ideas are dime a dozen, there is enough capital all around. And founders should be very careful in terms of who they are approaching and for what purpose. And right capital at the right stage is very, very important.
Absolutely. And I think you're very right that, the founder really needs to do the right kind of research to whom he's kind of approaching. Most of the time, the founders fail to understand whom they are going to, what kind of startup they've invested into. I think it's going to be a lot of help to these founders that if they do the right kind of research, whom am I going to, right, and why? So that takes me to the next question to the right side of the panel. So what are the, in your terms, what are the challenges that the founder kind of faces from a financier's perspective, to raise capital? And what are the things that they should be careful of before coming to you, right? That these are the things kind of, the goodie points that you would kind of consider. Maybe that will be of great advantage to founders over here, that, how they should approach, what are the kind of points that they should keep on their mind apart from the founder and the idea thing. So I think we'll take for an idea from all three of you. Sunil sir, to start with.
So, we typically invest at a very early stage when the founders typically comes to us. What we look for is what we call as the 3 C's: clarity, character, and charisma. So when a founder is actually pitching to us, I think he needs to have the clarity of thought in terms of the pain point he's solving, clarity about the industry, and clarity about how he's going to solve it. 2 is, I think he needs to put across the character. And when I say character, what we look for is what are the attributes which they bring to the table to solve that particular problem. That's very important to understand. A lot of time founders come to us without, putting across why they are best placed to, solve this. I mean, it takes us some time to realize that, but it's important to, put it across as founders that, this is what I bring to table. The third aspect is more charisma, which we are not expecting the founders to, put up on table. That's something which we evaluate basis our interactions with them. And charisma here is required to understand, whether they will be able to go through this journey of, building from an early stage to, taking it to a more mature stage company. And that's something which we determine based on our interactions. It's not necessarily interactions during the meetings. It could be, small behaviors which is off the meetings as well, which we actually notice some of these things when we are with the founders while making our investments. So I think that's something which founders should keep in mind when they're pitching or bring it across in their pitches to the investors.
Sir, Parag sir.
So your question was what founders should look for, or the other way around?
Both ways, right? What an investor looks in the founder before kind of investing, what are the things that they should be careful about before reaching out to you guys?
Okay, so I mean, he's added a few that I agree with. What I would say is, from a founder perspective, looking in, just make sure the chemistry is right. I think in 2021, many people accepted money from investors who probably came in with 1 week of effort into the company. And some of those investors are disappointed and the companies are badly affected as a consequence. So do your own due diligence. Make sure, I think, take some time over your decision is what I would say. Because letting somebody sit on your board for 5 to 8 years is a very, very serious decision. One that you shouldn't take over a weekend. It's a very serious decision. So just make sure that the other side understands the basic risks of your business. That's the way I would classify chemistry. If the other side is green on what the basic risks of your business are, which is the VC doesn't really, is not right, asking the right questions, for instance, then be careful even if the money is coming at a good valuation, is what I would say.
Very true, very true. So I think, it's very important, as you said very correctly, that at times he should not be greedy and he should be really choosing the right VC. And there are going to be many VCs now, and there are a lot of options for the founders as well in today's date. So that takes me to the next question for Bhushan sir and of course Ankur ji. So how do you foresee the future of startup funding, going ahead? How do you see, because there are N number of founders coming up, government coming up with so many programs, many alternative investment funds coming up, and hence the founder has multiple options. So I think, how do you see that challenge, or is that an opportunity? How do you look at that aspect?
Yeah, I think taking some of the clues from the other discussions also, like founders need to understand the different types of capital across the journey of the startup, from 0 to 1, or let's say, maybe these are the words which some of you will not understand, but like initial stages of before product, right? And then when you have a product ready, maybe our brand is established, and eventually become a processified company, like a possibility which can be listed, right? And I think good news in India today is most of these actually avenues are always available. If you are an early stage startup, there are a bunch of these angel programs which are quite popular today. Even government funds are already out there. So across stages, I think the ecosystem has matured. And that's why I think many of you would see a lot more vibrancy in this space. So one, understand the options are available. And you have to write, basically go to right option. If you're a day zero company, there's no point in writing to some large late stage funds, right? As you said earlier. So I think first is match what kind of company you are, what kind of founder you are, what kind of sector. Because most of us, when we introduced to you, we talked about our sectors, right? So if I'm getting a SaaS product company, possibly you're anyway going to see no, get no, right, from us. So I think matching your idea, you as a founder, to the, I would say, to the investor or type of capital which you're looking for is most important. Second one is, I think, the ability of an investor to help you out. If you're a late stage company, maybe you're purely looking for a growth capital per se. When you go earlier, in fact, the name itself suggests, right? I'm looking for angel, early stage investors, etc. They'll be more operating in nature. They will actually help you scale from 0 to 1 journey, because they have a lot more riding for that $1 million check they will ride. Whereas somebody writes a $200 million check, he knows your ability is to hire 100 people who will use that $200 million. In the first day, I'm looking for, do you have that capacity to spend that $1 million, $500,000 to move from 0 to, let us 10 people company, right? Or a 5 people to 20 people company, which can do that thing. So I think there are a few of the dynamics which I think interestingly are evolving, a lot more to learn, but at least avenues are available. So I think opportunity exists. You are already sitting on a green field, I think, where a lot more can be done today.
Great. Ankur sir.
Yeah, so just to add to what Bhushan has said now, it's equally important for founders also to decide when to, I'll just cover the banking part because there are so many other investors now here.
Please.
So when to go approach a bank and whom to approach first. That is, you need to decide once whether you're going for you can work with the debt or you actually need the equity.
Right.
And what the investor brings in on the table for you, whether is there any value addition. Let's say if you are a revenue generating startup, you can approach a bank. If you are doing good revenues, you please approach a bank. Banks will be there to help you and support you out. But if you're into, or you can say not in the growth stage, you're just developing a prototype and others, definitely banks are not the place for the investments or debt. In the early stages, if you take the debt and you are unable to service the debt properly, it becomes a challenge in future for you.
Got it.
And that founders have to be very careful. If you're not hit the market, your product is not ready, the investment or the debt investment from the banks is not the thing for you. Better you should look for angel investor or the early stage investors who can help you out, who can bring you, who can support you to bring your product to the market. Then definitely as a bank, we can support you. And once you hit the market, you are generating the revenues. There are multiple avenues again open up. The other investors which come in, those, and then A series, B, series B, and growth stage, you can say we can take it up. And there are multiple other entities which can support you and help you. There are multiple government schemes are available. we talk about, let's say, the CGTMSE or the CGSS, Credit Guarantee Scheme for Startups, which have recently started.
So many other SISFs.
But that comes only when you hit the revenue. You are generating the
sure.
revenue, it comes into place, and we can definitely help those startups.
Great. So now the last question, I think everybody has that question. I also had that question. How do you reach out? How does a founder reach out to you guys? You know, they end up sending so many mails and then hardly they find a reply. So I'm sure the VC is never so free. But what's the best way to reach you guys if any founder wants to kind of reach out to you guys? I think all of you can take that question.
I think I can simply answer. Maybe I think people can add, but I think one tagline I would say, finding your customers is far harder than finding a VC. Right? That's the today's truth, actually.
Yeah,
right?
that's
But maybe more we can add, but I'll definitely add something more later.
Yeah, I'll add to that actually. And those of you in B2B businesses, the kind of qualification you do before you go to a customer, identifying the influencer, the decision maker, the entire persona of the customer. But when it comes to reaching investors, people just go, blast some emails. Oh, I reached out to 500 investors and so on. It's not the quantity, but to all the points earlier made, understand the space you are in and focus on those investors based on the space, the stage, and the chance of closing. And I would rather go after 10, 15 highly qualified investors than trying to reach out to 100. And from the 10 and 15, go to the top 5 and go through the process. Second point I would make is there is no such thing as a fund. I think even within a fund, there are partners specializing on certain aspects. So that means if you are running a SaaS business and if you are approaching Axel, you're not approaching Axel, you approach Shekhar Kirani, who's known for SaaS. So that kind of diligence has to be done in terms of identifying which fund you're going after, which partner you're going after. And this is something widely known in the public knowledge as to who is interested in the space that you're operating in. So do the homework first before approaching.
I'll add to what Sir said, a very small point, and which is, the founder's way of reaching out. The VCs take a lot of time to reply, honestly. But the best way is to reach out to the investment analyst. Yeah? And because in any case, it's going to go there. And I think they're the right people then to push the partners that, sir, this is worth doing it. So always find who the investment analyst in that VC firm is taking care of that particular type of, portfolio. Yeah, sir.
Very well.
Yes.
Very well said. Always the investment analyst is the one who drives the VC firms,
So
not the partner.
Prateek is an analyst at their place. So reach out. If you want to reach out to one crowd, reach out to Prateek.
No. But I think aside from that, I think it's very important that, you look at it from a VC's perspective. He opens his email and he gets hundreds of requests. So there is no way you're going to read them. So you have to find out how to reach out. You need to reach out to the analyst. Don't send him an email, a blank one. You need to find out who does that analyst know and respect, and reach out to him through that person. You need to do your work to find out how you reach out to him. But you come in through a reference, because without coming in through a reference, it's not going to work.
Absolutely, absolutely. Sir.
So a slightly different viewpoint. We have built a culture in the firm that will respond to every email or a LinkedIn that comes in, irrespective of whether somebody sends us a D2C deal, which we won't do. Do we do it 100% of the time? Clearly, no. But we strive to get there. I would say, though, that would not be the typical industry.
No, so I think we also make it a point to try and respond to all emails, but like Anup said, there are at times a lot more emails we get than what we can respond to. So there is certain time lag which someone should expect. Of late I see a lot of founders writing to us, and they've put this auto emailers. Every 12 hours I keep getting the same founder. I'm putting this up right on top of your mailbox, putting this right on. That starts irritating to some extent. So I think as founders, you should be also conscious that, we are getting more than 30, 40, 50 plans. Some of these guys must be getting more than that a day. And it's very difficult to respond to every email. We try to, get back to them as soon as we can. But, you should also be conscious at some times that, don't put keep putting it back on top of our email box every 5 days, because then that irritates us and we stop responding to some of those emails. But otherwise, we try to address most of the emails back.
I second what Parag just said. At YourNest, actually, they try to respond to every single application, whichever mode it comes. And by the way, the first conversation happens with the partner, not the analyst. Only after the first partner call, is there a filter saying, is it going to go forward or not? Again, an outlier.
Yeah, just to add here, I think mostly what would happen, I think what Sir said here, right? You can find the person who is relevant in that investment firm to your kind of a deal. That's very most important. And mostly, if you go to a site, right, I think VCs are the most open industry. If you go to a site, most of their email addresses are there. So generally, the mails, like we also have something like Boost Up at Multiply, right? But all our email addresses are still open. And we typically, if it's coming to person, it's easier to respond. What goes in a common pool, assume that only weekly once or twice we'll possibly look at it. So do a one-on-one mails and add a value. Because like you don't want to miss a good VC, VCs do not want to miss a good deal. Because it's a negative mark for them, right? Ye deal to miss ho gaya, right? So that they are also thinking that way, right? So it's basically marriage on both the sides.
Great. So I think we are done, or we have some time for Q&A. I mean, yeah, it said time's up, but then it says 14 minutes. So I'm just kind of checking. Otherwise, we have. Okay, I'll take one more question. So, and then maybe a couple of Q&As. If anybody wants to ask a question, I'll leave it to them. Say if you have $10 million to deploy in the next 3 minutes, yeah, what kind of startup will you kind of look at? I think all of you. Yeah, elevator pitch. Now, reverse pitch. I'm sure we all have our choices and preferences, and we might be waiting for one such startup to come and write, I'll write the check right away. What would that be like?
I would invest in a company which is not in a hot sector. Because one of the most foolish decisions, I think, when you read about all these newspapers, is these are the hot sectors to invest in. I think that's a very foolish thing. Find out a sector which is not hot. Because reason being is that you're trying to worry about an exit 7-8 years down the line.
Correct.
You have no idea what is hot then. What's hot now is totally irrelevant. So find out, invest. If you're asking
This is
me
a golden opportunity, founders. Please record what these all people are saying, right? And just approach them with not so hot sector to Sir, Venkat sir.
I would go after a company that is into quantum computing. We've been talking about this. Like if truly an innovative, highly disruptive idea with deep IP, a couple of PhDs coming on board and saying, we are going to capture the market. If they can convince us, yes, the answer is yes.
Excellent. Sir.
Maybe for me, I think it's less to do with the idea, but more to do with the team. Because with 10 million, they can pivot many times. So for me, the best team, bank on for 5-6 years, because 10 million spending in India will take 5 to 6 years.
Awesome. Parag sir, I'm sure you have a different answer.
I'm a bit biased by somebody I met in the morning. Sorry, what did you say?
I'm sure you're going to have a different answer, I said.
Biased by somebody I met in the morning. So it has to be somebody who's trying a very hard problem to solve. Somebody who's lived and breathed a problem for let us say 10 years. Doesn't necessarily need to be in this company, but trying a hard problem, has lived it for very long and still knows that it is going to create another 10 years. It will take another 10 years. So somebody who has delayed gratification in his DNA is somebody I'm looking for.
Fantastic.
So I think, to be honest, I don't think we'll be able to make a decision in 3 minutes. but in terms of a sector, if I have to chase
Do you expect
someone,
the founder to pitch in 3 minutes?
No, we don't expect the founders to pitch in 3 minutes. But in terms of a sector, I think someone who's solving something for rural India is something we would look for in terms of investing into a space.
Fantastic. No, great. So I think we are done. But if there is any question anybody would want to ask, please feel free to ask. We can take maybe 1 or 2 questions, or we are done.
And I believe in the sector. And I believe in the sector I am. It will take another 6-7 years before it actually goes. That means ROI is going to come almost after almost much amount of time. Would any investor be interested in waiting for such a long time?
So I think I've been investing in India a long time in various kinds of businesses. It is my strong belief that a company, a worthwhile company, cannot be created in less than 9 years. Okay? So it takes that long for a company to scale, at least 9 years. Okay? I'm not saying 9 years. I'm saying at least 9 years. And if the problem is harder, if the problem is deep tech, it takes longer because there's a developmental cycle on top of it. So I think today there are investors available who will live with you for 5, 6, 7 years, then sell it off to another stage investor who will take you from there. So it's not as if it is a 400-meter race that only one person has to run. There are at least 4 people who can run that race. So look at it that way, and I think today there is money available in India to solve the kind of problem that you're trying to solve for, which takes time.
And on a lighter note, that sir never meant कि भाई 10 साल से आप पैसे रेस करने की प्रोसेस में वो नहीं कर पा रहे हो और 10 साल शायद लगने वाला है तो मैं दे देता हूँ. Yeah, so I'm sure he's addressing a larger perspective. So I think we are done. Yep. Thank you so much, panel, to be here.
So there is one question I can ask, I think, before you go. This is Dominic here. You can look at it from the left side.
Yes.
Left of yourself. Okay, sorry, it's right.
Okay, right. Yeah. Okay. Yes, Dominic.
So this is Dominic from Bees Labs. The typical problem which I face basically is, we were hunting for an investor for the last 1 year, and we've got a lead investor. He's based out of from Indian Angels Network. The final conclusion he's saying to us is, your product is a B2B. You have a scalable opportunity for a global expansion. You just bring me one institutional investor or an OEM together with me. I will be trying to invest that with you along. Is that the same thing that you will also look for? Because I felt that is like we went hard to the stage that we want to get there, and now we have a setback, and now I have to find another one, right? So that was the problem I am facing.
So let me reply to that one. So we are investment bankers as well. Come to us, we'll take you to the right place. You don't do it directly at times. When somebody says something like that, it's of course questionable. I mean, that was again on a lighter note, but I think it's an individual perspective. There are no such conditions generally the VCs will kind of put at. Right? They like it, they'll do it. So I don't think that this is contingent to if somebody else is jumping in this with you, then I'm ready to jump in, right? So I don't think it goes like that. You need to take your own radical call for that, and probably need to look at different.
Qualification and finding the right investor. If you're a SaaS company going after a global market, let's say, then look for funds that operate in the so-called Indo-US corridor or whatever. They are likely to come on board compared to somebody who's local.
And I'm telling you that there's much money to be deployed than the founders need. So maybe you're not looking at the right places, right? Maybe change your way to look at places. You might have the right idea, but try to find the right kind of people to connect with. And you're at the right place today. Yeah? Thanks.
Excuse me, I have one last question. You can see me here. This side. Yeah. Okay.
Yes,
I want to ask you about the risk capital that is available for pharmaceuticals and biotechnology. It is vibrant in the United States and advanced countries. This area of advanced therapy, medicinal products now, and RNA therapy and other therapies that are available for life-saving drugs. How about consumers in the healthcare sector? How we are addressing risk capital?
I think Anup sir is the right guy to probably take this one.
Sorry, I didn't understand the question, but are you saying that, are you talking about investors in life sciences, or are you talking about?
I'm talking about investors in life science. If you see the investment in biotechnology per se, in advanced therapy medicinal products, this is negligible in biotechnology in India. It's not vibrant like US. What is that stopping you from investing risk capital into this biotech?
I think
why it is not so vibrant like other countries?
I think partly the reason would be that there is not enough of that going on in India. Why is there so much of investment going into SaaS? Because there is so many SaaS companies. There are, I'm not saying that there are none in India in the life sciences space. We ourselves would, as I said, we made 50 investments. About 5 of them would be in life sciences. So it's about 10% has been there.
Yeah.
And
So we are seeing around 6,000 startups in biotech now. That is a number that was given by BioSpectrum. But we don't see all of them are funded by VCs. Many of them come from BIRAC, the funding coming from DBT, and they are all 50 lakhs. How can you expect 50 lakhs for a biotech product that is a life-saving drug? Which is what we don't get scale-up funds. This is a big problem. If they get 50 lakhs and scale-up funds are not available, so this is something to look into to develop our knowledge economy.
I think you're right, and I think it's the same challenge probably with defense, maybe deep tech, and so many other spaces. See, government would probably give you the grant to take the first step. It's not going to be with you throughout the journey, right? So BIRAC is a 1 crore grant, not a 50 lakh grant, and that's the highest that any grant is being given in form of any state or any sector as of now. So I think it is push for you to validate the product, ideate the product, then reach out to the right people. India, not necessarily you look at India only or the Indian VCs as investors, you reach out to many. I think it's a huge area. It's a matter of research, and there are specific investors who can kind of help you out on that front. Yeah.
In fact, definitely, I would suggest you to also reach out to global VCs, because I think what is happening interestingly, India is not interesting only for Indian VCs today.
Correct.
It's also interesting for global VCs, right? And even founders are opening their offices globally now, sitting in India, have not even traveled to US forever, may not even have a passport for that matter. It's far easier to kind of open offices. So I think if you are in that space, which is global, I would say global capital is also accessible to you sitting here in India.
Absolutely. Yeah. Thank you. Thank you so much. Thank you, DNB. Thank you, sir.